For as long as anyone can remember, real estate fortunes were built on gut feelings, right? Insider knowledge, being in the right place at the right time. But what if your next big investment wasn't a guess, but a calculated certainty? That is the world we're jumping into today, where artificial intelligence is moving out of the server room and right into the property market, giving investors a brand new data-driven edge.
The big vision for this whole revolution was nailed perfectly by Melanie Swan. She saw that the real magic wasn't in just one piece of tech, but in how they all work together. The convergence. The idea was to mash up AI, the Internet of Things, and blockchain to create a real estate world that's just fundamentally smarter, more transparent, and way more efficient than anything we've ever seen before.
So, what does all this high-tech talk actually mean for you? I mean, really, is an algorithm going to be the one signing the dotted line on your next property? That is the big question we're unpacking. We're going to look at the incredible promise, the harsh reality of some very public failures, and the powerful lessons that came out of it all. Okay, so first, let's dive into the dream, the utopian promise of AI in real estate. What happens when you point this incredible new intelligence at one of the world's oldest markets? Well, in theory, the results are nothing short of a revolution. This whole revolution really starts with a powerful team of three. Think of a smart building like a living, breathing thing. The Internet of Things, or IoT, that's the nervous system. Countless little sensors everywhere, collecting data on everything from the air conditioning to who's in what room. Then you have the AI. That's the brain. It's constantly crunching all that data to make things run better. And finally, blockchain. Think of that as the trusted, unchangeable memory, a secure record of everything, from maintenance to who owns the place. And listen, this isn't just theory. The impact on the wallet is direct and it is big. When you have an AI brain using data from its IoT nerves to smartly manage a building's heating and lighting, it could slash energy costs by a staggering 15 to 30%. That's not just a nice little efficiency gain, that is a direct boost to a property's income. That's real money. And the dream goes way beyond just one building. We're talking about a whole new level of market transparency, where everyone's working off the same verified data. That in turn builds investor confidence and makes properties easier to buy and sell. But you know what? Maybe the most powerful promise of all is that it gives regular investors access to the kind of heavy-duty analytical tools that used to be only for the giant institutional firms. It's leveling the playing field. So, that's the promise. Now let's get practical and see how this actually translates into a powerful new toolkit for you, the modern investor. This is where we see the huge shift from old-school guesswork to data-driven strategy. For generations, investing in real estate was all about who you knew and what your gut told you. It was a reactive game based on little scraps of information. The new way? It's the complete opposite. It's all evidence-based, pulling from massive, diverse sources of data to give you instant insights. It's about building proactive, predictive strategies. It's a total mindset shift from emotion to evidence. And the amount of data that an AI can chew through in seconds is just mind-boggling. It's not just pulling up tax records, it's analyzing satellite photos to see if a roof needs repairs or if there's new construction nearby. It's scraping social media and Yelp reviews to figure out the actual vibe of a neighborhood. It's even using anonymized cell phone data to map out where people are moving and identify the next hotspots before they even happen. Now, all that complex stuff gets boiled down into three pretty simple steps for you, the investor. First, the AI just vacuums up hundreds of these different data sources. Second, its predictive models get to work, finding hidden patterns and forecasting trends that a human could never, ever spot. And finally, boom, it delivers a clear, actionable insight, flagging the exact properties and markets that have the highest potential. But, and this is a big but, the path to this AI-powered future was not a straight line. Not at all. The early hype and excitement pretty quickly ran headfirst into some very expensive, very public failures. This is where the story takes a critical turn. Yep. In 2021, that perfect vision of a totally automated real estate market just crashed into a brick wall. And the most famous cautionary tale, of course, was Zillow. Their iBuying program, Zillow Offers, was designed to use a super smart algorithm to buy and flip thousands of homes at scale, without anyone ever even seeing them. And the results? An absolute financial catastrophe. Zillow had to shut the whole thing down, lay off thousands of people, and take a write-down of over $900 million, a nine-figure loss.
It was a massive wake-up call for the entire industry about the dangers of just putting blind faith in a black box algorithm.
So, what went so horribly wrong? Well, at its core, the algorithm was just brittle. It was trained on years and years of stable, predictable housing data from before the pandemic. So, it learned the patterns of the past and just assumed they would go on forever. It was completely unprepared for the black swan event of the pandemic and the crazy market volatility that came with it. It kept overpaying for homes because the stable world it had learned from no longer existed. But here's the interesting thing. This spectacular failure didn't kill AI in real estate. Instead, it was like a trial by fire. It burned away all the naive hype and forged a much smarter, more resilient way of using the technology. And here it is. This is the central lesson learned from that whole Zillow mess. The future isn't about replacing human experts, it's about making them superhuman. The best models create a hybrid system, a human in the loop, where the AI's incredible number crunching power is guided and double-checked by human context, intuition, and wisdom. See, a purely algorithmic approach, like Zillow's first try, it's a black box. It has no real-world context, and it can break when the market gets weird. But a hybrid intelligence model, that's adaptable. It combines the raw data with human judgment. It lets a real person sanity check the AI's suggestions before, betting millions of dollars on them. This is that powerful partnership in action. The AI does the heavy lifting. It sifts through thousands of properties to spot patterns a whole team of people would miss. But the human expert provides the nuance, that deep local knowledge and strategic gut feeling to interpret the data correctly and make the final informed decision. It's truly the best of both worlds, machine scale and human wisdom. So what does this all mean for the future? Well, it's pretty clear AI is here to stay, but its real job is to be an incredibly powerful co-pilot, not the pilot. The next wave of innovation is all about making it even easier for humans and AI to work together on those big, complex decisions. And the results of this smarter hybrid approach, they really speak for themselves. I mean, look at Dunkin' Brands. Using an AI platform, they cut their new site analysis time from 1 hour down to just 30 seconds. That's a 99% reduction. Or BlackRock, the global investment giant, they cut their analysis time by 65%. Even Zillow learned its lesson, using AI for personalization to boost user engagement by 33%. These are massive, tangible wins. So, this journey from hype to reality gives us a pretty clear roadmap for success. First, you have to prioritize data quality. Garbage in, garbage out. It's that simple. Second, embrace that hybrid intelligence model. The goal is to make your experts faster and smarter, not to replace them. Third, remember that tech is just a tool, not a magic wand. It has to solve a real problem. And finally, stay flexible. The market will always change, and your models have to be ready to change right along with it. Which leaves us with one final thought, and it applies to a lot more than just real estate. In a world that is just flooded with data and algorithms, maybe the most important skill is finding that perfect balance between machine intelligence and human intuition. So for your next big decision, what's the right balance between the data and your gut? And maybe more importantly, when they disagree, which one are you going to trust?